Hello, ladies and gentlemen. It's Investment Show, Modern Financing with Sasha on IBM or POT TV. And I would like to introduce my guest for today's program is Milan Sambarak. Dr. Milan Sambarak, welcome to the show. How are you today?
Delighted to be here. A pleasure and an honor, Sasha. Thank you.
Thank you, Milan. It's we are going to have a great show right now. We are going to concentrate on something what we are using in our fund portfolio. But before we will describe what is a fund portfolio, we must have our core investments in a very serious position that would definitely be responsible for our prosperity in the future. And I'm talking about financial future, of course, more than anything else, because there are a lot of different type of futures. You may have a great future in sport or in chess or in some other endeavors, but all it's based on your financial health. And in order to address that, I would like to say that our core portfolio should be in a very solid, bulletproof investments, or at least as a minimum, it's S&P 500 funds like ETF, SPY, and Milan will tell us why. Please, nobody is doing that better than you.
Well, thank you, Sasha. I mentioned to you recently, I think it was in a private conversation, that I had a friend over who has been in the investment industry for more than 20 years, and he has run hedge funds and private equity funds, and you name it, he's been involved. So I asked him how many portfolios he has seen. He has seen portfolios in the hundreds. I asked him how many of those had matched the S&P 500. He said zero. Now, how difficult is it to match the S&P 500? You can teach that to a 12-year-old. S&P 500, which represents the 500 largest companies present in almost every nation in the world, but headquartered primarily in the United States. And if you take an exchange-traded fund, which tracks the S&P 500, SPY is a great example. You are matching the American economy as a whole, the strongest economy in hundreds of years. And you can teach a high school student, a 12-year-old, how to do that. And beating that, I told you, zero. The man who has seen hundreds of portfolios, zero have done it. Now, there's a huge conflict of interest between Wall Street and Main Street. Wall Street started out by bringing together people who had an idea and needed to develop it and needed money. And they brought them together with people who had money, which they wanted working and earning something. And Wall Street took a small percentage of that transaction as compensation for its efforts. Today, that sort of activity accounts for less than 5% of Wall Street does. Wall Street wants us trading. Traders are losers. Wall Street wants us to be fully invested. We should have an asset allocation where about half of our assets are in SPY and the other half are in cash or near cash. So 50-50 works very well for a lot of people. It doesn't have to be 50-50. It can be 55-45, 60-40. Those are small variations. The important thing is to have that 50-50 asset allocation, roughly speaking, 50-50 all the time. How much does Wall Street make on any of our uninvested money? Zero. So they want us to be fully invested. So they want us to be fully invested and they want us actively trading, both of which are destructive to our economic health. And if we have most of our assets invested in SPY, the American economy as a whole, with an asset allocation of about a half in that and a half in cash or near cash. It's a very safe way to go. And managing such a portfolio, we did a survey of our members. This Monday Morning Millionaire program, which I run, has about 400 members, mostly professionals, dentists, physicians, veterinarians, pharmacists, optometrists, and some other people too as well. And we did a survey recently to ask them how much time they spent managing their portfolios. 15 minutes a week. So in 15 minutes a week, you can achieve the maximum financial security possible. And we should all do that. Then we can have what we call a fund portfolio. And a fund portfolio is one in which we pick stocks. Stock pickers are right about half the time. Mathematically, certainty has to be, then there's no other way. We can get involved in futures and derivatives and puts and calls and all sorts of things. But we have to have that fund portfolio of such a size that should we lose it all, we won't be reduced to eating dog food. So having said that, it can be a lot of fun. It could be the equivalent of going to Las Vegas without actually going to Las Vegas. So puts and calls, derivatives. So let's talk about that. In order to write successful covered calls, we need a security which is quite volatile, because the greater the volatility of any security, the greater the return, the potential return, the greater the premium income. And so it also needs to be a solid stock. So one that I've found by rooting around and looking is Novavax, symbol N as in Norman, V as in Victor, AX, Novavax. And Novavax is a company which does research, pharmaceutical research. So here are a few facts about Novavax and why I like it. I like it because it's volatile. And
it did very well today as we speak.
It did very well today. The whole market did very well today. And today
Absolutely.
really doesn't count. Another thing that we tell our members is don't look at your portfolio any more than once a decade. Wait till you retire. Now, that's impossible. Nobody can do that. You look at it every day. And Novavax did well today. And so did the whole market. But about Novavax, here's some characteristics of Novavax. Oh, before I go into Novavax, I just want to mention a book by Sheena Iyengar, a book published. She published that about 20 years ago. And I went to the book signing that she did. And the book was titled The Art of Choosing. The most interesting thing to me about Iyengar was when you read reviews of that book, there's a large number of reviews. Not one of them mentions that she is a full professor at Columbia University. Yeah, some of them do mention that. And she's blind. Nobody mentions she's blind. This woman is blind and brilliant at the same time. So she pointed out that if we have several choices of ice cream or whatever a choice of automobiles, anything that you want to buy, if we have several choices, that's a huge advantage. But having too many choices is a disadvantage. It results in paralysis by analysis. Coca-Cola itself has 1,000 products. If you go into a supermarket to buy a salad dressing, how many salad dressings can you buy? And then you want to make your own salad dressing by mixing oil and vinegar. How many types of oil can you buy? How many types of vinegar? Endless. Paralysis by analysis. It is not an advantage. So nowhere can we find the overabundance of choices to a greater extent than we can in retirement planning and investing. How many choices do we have in addition to individual securities, different mutual funds, different hedge funds? Endless. It's endless. So paralysis by analysis is actually very common. So the simple act of choosing an exchange-traded fund which tracks the S&P 500, SPY is a great example. It's so easy. You just simply eliminate all the confusion arising from the choices that are available to us in the market. So Novavax, a couple of things about Novavax I'd like to say. In 2015, Novavax received an $89 million grant from the Bill and Melinda Gates Foundation for Research. In 2020, in May, it received a $384 million grant from the Coalition for Epidemic Preparedness Innovations. On July of 2020, Donald Trump's government lent Novavax $1.5 billion for research. So, it's a solid company. Interestingly, the company right now has $1.5 billion of cash sitting in its drawers, which works out to $67 per share. And it's trading right now at $54 per share. This is what Warren Buffett calls a cigar butt. People throw away a cigar butt, but there's still another couple of puffs in it. So Novavax is trading below what the cash that it has in its drawer. That's the kind of security you want to buy. Warren Buffett, one of the most successful investors in history, looks for three features in a security. One is it needs a wide moat, meaning very little competition. Coca-Cola would be an example of a company with a wide moat. Novavax does not have a wide moat. There are a lot of other companies doing a similar thing. The second thing is you have to understand what it's doing. So Novavax is a pharmaceutical company, so we don't understand the details of pharmaceutical activity unless we have biochemistry in our background. See, as a dentist, a practicing dentist, I have to take chemistry and then organic chemistry and then biochemistry. I found biochemistry the toughest. But nevertheless, we know that Novavax is into biochemistry. So that's what is the second feature that Warren Buffett wants to see. And the third one is the price has to be right. Most risk is in price. If you buy something at a sufficiently low price, you reduce the risk to a great extent. So those three features. And Novavax has them all today because Morningstar estimates Novavax value at $178 per share. Today, it just recently closed at $54 a share. It closed at a price lower than the cash that it has in the bank. Yeah, so that Warren Buffett would like it. In fact, other than Fidelity, almost all institutions are adding to their positions in Novavax. So that's the security to be in if we're going to write covered calls.
A small correction. It's already $58 a share. It's close to that 58.
58.
And
Well,
it's on its way. It appears to me that it will go farther. And I have small position on Novavax. I just took so-called the bullish spread a while ago when we are talking about options. We will explain what is a bullish trade. So I bought a certain call in Novavax, thinking that the stock will go higher. And I was right on that one. However, to decrease the risk, I sold at the same time another call on Novavax, but higher. So that helped me to reduce my cost of a call. And it could be argued that I will not make as much money as I would pay if I would buy a naked call. But my rule is never ever to buy naked call or naked put, because this is a losing proposition. So I don't entertain that, even if I would do better than I've done in these positions that I've obtained now in Novavax. But I don't care, because even if I will make more money, but my mental health will suffer. And when your mental health suffering because you're doing things that it's absolutely against your nature, it's like when you're playing piano and you will just bang all the keys and you will get cacophonious sounds out, and you don't want to do that. That's why I really worry about my mental health, and I will never do naked calls or puts. However, selling call or puts, this is a different proposition. The problem with the selling calls is you must sell covered calls. Unfortunately, you cannot do any other way. You can secure it by cash. But if the stock will run away, say Novavax, it can go now from say $58. It can go easily to $158. And
it's been there. It's been there. Yes.
it's
Yeah.
been there before. So what's happened with your cash? That you secure that, your cash will start bleeding, right? and it will start bleed so harshly that it will make all this transaction absolutely ridiculous, and they will just lose a lot of money, right?
Well,
So
Sasha, everything that you said so far, we have to look at the background of your statements, and that is, doesn't matter what you're holding, there will always be better investments than you have. Always.
correct.
Never use the word never, never use the word always, but this is an example
Mhm.
where you can use the word always. There will always be better investments, so we have to accept that. So I would like you to tell us about how you handle covered calls on Novavax, because we tell our members that they can do that in their fund portfolio. It can be the equal of going to Las Vegas without leaving home. Doesn't have to be. Most of our members' fund portfolios are not so much fun.
They
They
have
don't
portfolio, but not fun. Right? It's good.
they don't make the kind of money that their core portfolio makes by simply holding uh, SPY and rebalancing so that every time it drops, they're buying bargains. Everybody wants to do that. You go to a grocery store, you're looking for cheaper apples, cheaper car, cheaper camera. And when the market is going up, they are taking profits. So we are just as happy to see markets dropping as they are done now, as we are to see markets rising. New York Stock Exchange hit a peak in January the 3rd of this year, and it's dropped into bear market territory since that time. We love it, buying bargains, knowing that the money we have in the market isn't something we're going to need in the next couple of years to buy groceries and pay the rent. So, given the statement that I just made, have a fund portfolio. Nobody needs one, but it can be very exciting. And every once in a while, we stumble across something worthwhile in our fund portfolio, some of which we can transfer into our core portfolio. So I'd like you to tell us about how you handle covered calls in your fund
Okay,
portfolio.
before I will do that, let me admit one thing, that there has to be some kind of a balance between your core portfolio and your fund portfolio. I believe in a 90-10 split, which is 90% of your core portfolio is either SPY, or in my case, I choose as alternative high-paying dividend stocks that sometimes they could perform better than SPY, sometimes not. I admit that, but because I happen to be a very greedy person. And I love dividends, and therefore I jump at all those high-paying dividend stocks. I'll name just a few that I have. For example, symbol MO stands for Altria Group. Philip Morris second word stands for MO. That's their stock symbol. They're paying currently 8.52% dividends. And its cost today, they're close about $43, $49, $42.96 to be exact. And now, this is so-called the sin stock.
Yeah.
People love to smoke cigarettes, especially Marlboro, and they used to smoke Marlboros. They do smoke Marlboros. They will continue to smoke Marlboro cigarettes. It's a fact of life. Okay, it's the same thing like people like to drink Coca-Cola. Is Coca-Cola good for your health? Some people believe it's good. Some people believe it's maybe not so good.
Well, it's
Especially as
interesting.
a dentist, you may have your own opinion about.
Well,
Um,
isn't it interesting, Sasha, that the executives of cigarette companies 30 or 40 years ago, while themselves not smoking, were telling the world that their smoking is good for you? There's a famous picture of a bicycle race, Italian bicycle race. I've forgotten the name of the Coppi, was that his name? Famous cyclist. And so they're cycling in a race, and one of them is lighting a cigarette for the other guy.
oh yeah, fantastic.
Cycling forward because inhaling the tobacco is good for you. When it was found out that it wasn't good for you, and the executives of cigarette companies stopped smoking, they were still telling the world that it's just fine to do it. Nine
Actually,
out of 10 doctors smoke Lucky Strikes. Yeah.
I want
Let
to
me.
tell you something. In the mid 90s, 1990s, of course, I was a little bit younger than I am now, and you were younger, I'm pretty sure at that time. So I was flying, I remember it was Air France. I was flying to Europe. from Toronto. And at that time, Air France was the only air company that still allowed smoking in the last few rows, right?
Look,
I didn't smoke at the time. I smoke now cigars from time to time, but at that time, I didn't smoke at all. So, unfortunately, I was late for registration and I got seated in the last one of last rows.
yeah.
And so after serving dinner, and the food was very good, and that one reason I
Air France is good. Yes. Uh-huh.
now one man is coming from some middle cabin. He's coming back, and he asked if he could sit right next to me and smoke. Well, it was his right because he's in the
Sure,
last.
of course, yeah.
So I said, "Yeah, sure, okay." So he smoked a cigarette, went back to his seat. 15 minutes later, he comes back again and says, "You don't mind, I'll smoke." Okay, so he smoked again, back. 15 minutes later, he comes back. And I asking him, "Would you like to change seats? I will go to sit in your seat and you can take my seat." He looked at me and says, "Really? It's impossible to say it stinks here because of the people smoking so much or so." And that was him who smoked every 15 minutes. That was just incredible. But there is a huge power, and that some people in Europe they smoke, in Asia they smoke a lot, or somebody. Again, that's nothing to do with.
Was there a division between the smoking section and the no smoking section? Was there a division between them?
There was no physical division. No, it was just assigned. I think the last three rows were
Yeah,
smoking section,
yeah.
and all the rest non-smoking section. And it was a dying days of smoking in the aircraft. And the Air France was the last one to
Air,
cancel all
Air
smoking.
France pilots drank with their dinner until very recently. They had wine with dinner because it's such a French thing to do. Yeah, they cut that out a few years ago, but yes, the smoking section and the pilots drank.
Yeah. I'm,
So
I
anyway,
wouldn't be surprised if French pilot did something else during the flight, but that's for another story. Okay, the businesses sounds they're raising dividends almost every year or so on. So 8.5%, it's not so bad. The other sin stock that I also love is also cigarettes company BTI. It's a British American tobacco company. They're paying 7.18% dividends, and they're stock closely at $42.18. Another company that I love, and I bought it first about a couple of years ago, they paid 5.5% dividends. The company is Pfizer.
yeah,
Unfortunately, today their stock went up, but it's paying now only 3.9%, 3.09% dividend. So it's not classified anymore in my criteria for selecting high paying dividend stock. It's paying dividend stock, but it's not high paying dividend stocks. At least it's close to that $51.37. So all I need is for them to raise their dividends. Hopefully they will, because they're making tons of money. So they will report, I believe, July 28th, their next quarterly.
so will you allow me to be the devil's advocate here for a minute,
Of
Sasha?
course, please do.
Um, do you know what the annual percentage growth of SPY has been over the last 100 years? It's been 10%.
I thought it's 12% or close to 12.
Roughly
Oh,
10%.
but at least 10%. I agree.
At least 10%. So that's better than your dividend stocks. Furthermore,
Really? Why do you think so? Pfizer, when I bought it about 2 years ago, it was only $35. And now it's $51.37 in 2 years. I think it's pretty good return.
well,
Altria, I acquired Philip Morris, the symbol MO, which is paying 8.5%. I acquired at $35. It's now $42. But also, don't forget dividends, 8.5%.
do
So
you
I
know?
collected 17% in dividends, and it went up about say 20% or so. So it's not so
Do
bad.
you know? Do you know what kind of dividends Berkshire Hathaway has been paying over the 40 years or so?
Very little, if any.
Zero, no dividends,
Zero.
because
Okay.
zero,
Makes
because every time a company pays out a dividend, the uh, value of that company drops exactly by the amount that it has sent out. The company is worth.
No, it's a very controversial issue. Some people believe there is no reason whatsoever to hold stock which is not paying dividends. It's a losing proposition right away because you are the owner of the business. So you own the business in order to have profit in
Yes.
your hands,
Yeah, yeah.
not when you sell the stock, because this is a iffy proposition. You may sell stock at profit, you may sell it at loss, depends when you're selling it, right? And it doesn't matter how well the company is doing, it's a market conditions, it's a geopolitical situation in the world, and so on. There are many factors, too many. But if you're paid dividends, that could be 3%, 5%, 7%. S&P, by the way, pays dividends.
It does. It does.
Yeah,
Yeah. Not
but
a lot,
it's
but it
two,
does. Yeah. Not a lot.
it's
But it does.
2%, but still 2% it's something, okay? Whereas if you paid zero or you paid some negligent, for example, I love stock Nvidia and I sell real covered calls on Nvidia, but
And
Nvidia pays negligible, almost zero dividends. Now that's why I don't have Nvidia in my core portfolio. I love the stock. I would put it in my portfolio, and my return probably would be better, especially in coming couple of years. I'm pretty sure about that, but it just doesn't pay dividends. It pays.
question for you, Sasha. A question for you. How much time do you spend managing your portfolios?
Well, it's I need to spend maybe, I don't know, maybe 10 minutes a day, but because I love it, and when you love
Uh,
somebody or something, you spend a lot of time with
well,
what you
that's
like.
true. That's true. Yeah. Yeah.
You see,
I
don't
told you
forget that I'm by nature, that I'm a player. I'm playing piano, I'm playing chess, I'm playing in casino. I just love the playing process. And to
that. Yeah. Yeah.
me, this is almost like a second nature. I just love spending
Yeah.
time watching
Sure.
stocks and
No, no,
see
that's
what
true.
they're
That's
doing.
true. Yeah. Yeah. The survey of our members show that on average they're spending 15 minutes a week, and the
Yes,
rest of the time they're
yes.
practicing dentistry or whatever they do, which is the best way for a working individual to contribute to his portfolio, work at his job. But some of them do spend 8 or 10 hours a day because they love it, and that's easy
Absolutely.
to understand. Of course, yes. Yeah.
Absolutely. Yeah, so I spend probably more time than average person, but I'm not an average person anyway. So there is no
Well,
surprise.
yeah, certainly not. How do you protect yourself from being assigned, from having your security called away from you?
This is a very good question because my core portfolio, which I mentioned, I have a few more, but I'm not going to tell you what they are. For example, Gabelli dividend and income funds, very solid portfolio. It's dividends now 6.43%, some others, but that's not my point. My point is that these stocks, what I mentioned, they are in separate account, which is not tied up to my fund portfolio account. So therefore, number one, I'm not selling covered calls on my course
Yeah.
portfolio because I don't want to even think about being assigned. And then what, next day I'll buy it back, maybe at higher prices. And there are costs associated with acquisition and so on. When you're assigned, you have to pay some fees or so. I don't want to even think about that. So
Yeah.
all I need them to stay intact, continue to pay, or better increase their dividends. That's all what I need. Now, in my fund portfolio, I used to have, by the way, Canadian bank stocks, and one of the stocks I had was CIBC.
Mhm.
Uh, and what's happened is it's paying pretty good dividends at the time. I think it was 5.5%. So there was a time I sold covered call, which expired on Friday, and um,
You sold them on a Monday.
I no, I sold probably a month before that. I've
Uh,
collected business premium, and then Friday also it was a dividend time. And
uh,
guess what? On Thursday, a day before my dividend, I was assigned. So I lost my dividend. Overall, I made some money because I sold covered call and I collected
mhm.
dividends before that. But that was a great pain. when somebody assigned me just to grab this little dividend that I so much wanted to have. It's not, I'm not talking about a lot of money. It's just the effect. It's that person did it so dishonestly, and kind of like he was like a spy. He was watching my strategy. So he says, "Okay, now I'm gonna get him," and he did it. And oh my God, he just ruined my day. So
Well, mistakes are practice shots. Mistakes are practice shots.
yes, yes, mistakes are unavoidable in this business,
Yeah.
unfortunately. And I must admit, I've made several mistakes, and one of them, I'll tell you by the way. Um, this is something what I still haven't decided really. What's the best way to do it? If you have SPY,
Mhm.
SPY, and you hold it for 10, 15 years, whatever you want to hold. So you don't trade really. I mean, you can
Yeah,
increase
right,
your position, you can decrease your position, but that's what depends on market conditions and your cash
right.
available. You can do it. Fine. That's an easy one. And this is why I love your method because it eliminates doubts about, well, should I do? I mean, it's almost like in a chess game. When you make your move, you already know three most probable answers. So you know in this situation you go this way, in that situation you're gonna this, that so on. So that's what I love about this. Now, if I said that I choose this high-paying dividend stocks instead of SPY, so now I raise a lot of questions which I wouldn't have as before.
Mhm.
The question is number one. Let's see the same Philip Morris Ultra Group. Okay, it went. I bought it at 34, $35. It went all the way to 55 or even $60. Now, what should I do? In your theory, it's very easy. You just sell, generate more cash. And if it would go down back to say $45 or $40, you would buy it back, and because you would have now better price or so on. Now the only problem is in my situation is that if I will sell, I will lose dividends. So I have to replace that
Right.
with another stock which is paying dividends just as good or maybe even better. And those stocks are not easy to find. So therefore, well, you hold on to your stock because you sort of like that it's not going to stay there for long. It will have some correction. It will go down, so you could buy it at a better price, but then you would lose dividends, and you don't know what exactly your better price. It will go down to $45. Why not to $42 or maybe even 40? So this is raising a lot of questions that you wouldn't have in your system. S&P
You know, when J.P. Morgan was asked more than 90 years ago, what will the stocks do? He said they will fluctuate. And that hasn't changed in over 90 years. And they're going to continue fluctuating. So with our system, we're taking advantage of the fluctuations.
Absolutely. So this is, from I'm rating your system also from the educational point of view, because in my younger years, I used to teach music and chess and so on. It's to tell you the truth. The music to teach music is so much easier than chess. I'll tell you why. Because in music, essentially, okay, here is some kind of a song that you want your student to learn how to play. Let's see, he's struggling, he don't know what to do. So you show him exactly, you play it, and then he just repeats after you, basically like a monkey. And that's he's getting more proficient and so on. In chess, it doesn't work that way because it's in chess you have to not show the best move in a position. You have to explain why this move is better than others. And there are so many concepts, there are so many variables that you have to introduce and so on. And it's really very, very difficult task, much more complicated than music. Now, to teach stock investing and specifically options, I found it's next to impossible. It's so much more difficult than either music or chess or just
Yes.
anything. Even in options, there are so many strategies, and
Yes.
nobody can prove that this strategy is better than another one because a lot of people, based on the same information, what's available to
Sure.
everybody, come up with completely different decisions.
You have to have this agreement, otherwise there will be no market. You need this agreement.
Absolutely.
Yeah, yeah, yeah.
Absolutely, absolutely. So it's very difficult. And, what I have few students in option trading. All I start is first of all with covered calls, because if they don't understand covered calls, you have to run. They will never understand anything.
No, no hope for them. Yeah, yeah.
Absolutely. So with a covered call, at least it's not so complicated. Here's a position that you have. Nvidia, it doesn't matter what, or Philip Morris, Altria Group, or it doesn't matter what stock you have, or even SPY, because we already agreed to augment your profit. You can from time to time sell even weekly options or monthly or whatever you choose, or even 2 days options. There are 2 days options available on
Yeah,
SPY.
yeah. SPY, yeah, yeah.
Yeah.
Twice a week.
You can initiate spreads. You even don't have to own goes through SPY. You can initiate spread. You can buy underlying call and sell a little bit higher if it's a bullish spread. If it's bearish, it's opposite. But you have to go step by step, and it's so difficult to explain. And sometimes I feel like you have to initiate just any position. Just take a position. And if you are losing that position, take a loss. Press a button and take your loss. You have to learn how to take losses. Because if you don't learn how to take losses, your loss can eat you very easily. You can get into position that is losing, and at the beginning it's not losing that much. Where you bought stock, say at $50, now it's closed 49 and a half. Yeah, well, that's okay. Tomorrow it will come. Oh, tomorrow it goes back to $46. Oh, now you're on 1,000 shares, you're losing 4,000. Yeah. Okay, it will recover. It will recover. In the next day or two, it will recover. Oh, so now it's $42. Now your loss is getting more and more serious. And you have to do something because, see, in a game, let's say you play a game of chess. You lost. Okay, the game is over. Your loss is a loss. You got 0 point from one game, and that's it. So you can start next game tomorrow, for example.
Mhm.
In stocks, your loss is unlimited. The
Yes.
stock from 50 goes to 42, and it can go to 25, and then 17, and
Well,
then eight and a
that's
half, and so on.
that's
And
that's the
your
main reason.
history.
Yeah, that's the main reason why margin accounts are a problem. We
Oh,
dis- we discourage people from having a margin account. If you want to use borrowed money to invest, that's okay, but don't have a margin account with your stockbroker because the rules and regulations of margin keep changing unexpectedly.
absolutely, and they can change them, right? If it's a very volatile market, sure they will change. Then also, what's the problem with margin calls is that a lot of markets down days were generated by margin calls because people.
Yes.
I noticed that when there is a huge selling, normally it subsides around 1 o'clock. Because most of these brokerage houses they want to settle their margin calls by 1 o'clock. So by 1 o'clock, so much margin calls were settled through either people delivered more money. Although William O'Neill said, never ever pay margin. If you're under margin call, sell your stuff and get rid of it. Never ever bring more money because
What about never ever have a margin account? Borrow money from the bank.
exactly. So this is why, for example, in my core portfolio, I don't have margin account. I never, when broker asked me, would you like to sign for a margin account? I said, no, thank you very much. I don't need.
They
Okay.
make the broker makes a lot of money on your margin account. On margin,
Absolutely. So you refuse
what you
margin account right away, and this
Yeah,
is the only
yeah.
way. So we are going to talk more in our next program. We for sure we're going to talk about management of your core portfolio, but most importantly your fund portfolio. And your fund portfolio should have not only portfolio but a fund. And with the fund, I need to have profits. So we are going to how to generate real profits. I will show some of my trade, and you will probably will have somebody who will show their trades, and we'll go from there. We'll learn together. We will admit our mistakes, and hopefully everybody will prosper
Well,
from it.
one more comment before we leave.
Please do.
Somebody said instead of having financial managers or portfolio managers, we should have income managers. for retired people, income managers. Yeah.
Absolutely. I have no problem with that. And let's
Yeah.
have them here. Okay. Milan, thank you so much for
Thank
program
you. Thank you for
today.
having me on your
I
program.
hope we'll have it next Wednesday again. Thank
I
you so
look
much.
forward to it. Thank you.
Bye bye, everybody.
Bye bye.